Today we are talking about a near penny stock REIT that I think has some of the best potential in the market today. So if you guys enjoy this type of content, don't forget to like and subscribe. We are checking out BSR Real Estate Investment Trust. It's on the OTC markets. This is a small company. Very, very small. We're going to look at it. I have 3 insane reasons why I think this thing could do extremely well within the next 5 to 10 years. So we're going to be taking a look at all of that and diving into this fund to see exactly why it can go big. The biggest reason I think BSR could go insanely big in the future is because of where they are purchasing properties and where they own properties. So this is about BSR. BSR is the leading owner and operator of multifamily communities in the Sun Belt region of the United States, headquartered in the historic Union Station in downtown Little Rock, Arkansas. BSR traces its roots back to blah, 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 areas with some of the lowest unemployment rates in the United States. Check this out, including Dallas, Austin, Houston, and Oklahoma City. Now, the main reason that I'm huge on BSR in the future is because Dallas, Houston, and Austin. I keep reading those out of order. This is big. For those of you that don't know, there's been a lot going on in California recently. Let's take a look at a few articles that prove that this could do extremely well in the future. Elon Musk versus California and what the exit of X and SpaceX means for the Golden State. Now, there's a lot of things that go into the political side of this that I'm not going to get into. I'm just trying to track the money. Now, Elon Musk and the California governor, Gavin Newsom, do not like each other. They haven't for a very long time. They probably never will, but this is insane news. It's great news for Texas and it's bad news for California. Elon Musk announced this last week that he would be moving the headquarters of companies X and SpaceX from California to Texas, the culmination of his longstanding face-off between the volatile executive and the state where his companies began. They call him volatile. I guess Elon Musk is a little bit out there. But this is huge. They are moving, this is thousands of jobs between X and SpaceX. Now, they'll probably always still have a base in California. He moved Tesla over as well earlier, quite a while ago. Tesla has been building the Gigafactory in Texas as well. This is huge news for Texas growth. Now let's check out something else that happened interesting this week. Texas scores again a goal on California as Chevron moves headquarters to Houston. Now there was some disappointing news that came out with the whole Chevron lawsuit in the Supreme Court that I am not a fan of. But I am a fan of making money, so I am going to capitalize when the time comes. Chevron has been in California. The company started in California in the 1850s. 1850s, you guys. And it is now moving. This isn't some huge upset between the CEO and Gavin Newsom. It's just management saying this is what's best for us. This is huge for Texas. Chevron has, again, thousands of employees. And again, they're not moving everything. They're moving headquarters. So they're not taking every single employee, but they are going to be putting a ton of money into the Texas market, not only with more employees in that area, but with real estate, with any number of things. They're going to have to work somewhere. There's going to be so much opportunity. If they bring in outside hires from outside of Texas, you're going to help with the Texas economy. If you hire people that are already working in Texas, you're going to be creating more jobs. There is so much going for Texas right now compared to California, and it is insane. And another reason, I gave you 2 reasons why I think this REIT could do extremely well. But another reason is I doubt that this is the last that we see of companies leaving California. And I live in California. I'm devastated. I think more will follow. There is more money to be made in Texas. There's better stuff involving taxes. There's a lot more room for corporations. It's definitely not, I don't know how I want to describe California. It's more free. It's Texas. It is more free. So I think that this could do so well for this REIT. Another thing that I think is phenomenal with BSR, here's their website. These properties are stunning. They are stunning. These are not low-income properties. These are properties that are in the Sun Belt, like it stated, but these are high-end. You're going to have people that have money in these areas. So I think that is super, super important. They like, look how beautiful these places are. And this is just one of them. So let's see. Let's look at another one. Let's look at Twin Creeks. I'm not sure where this even is. I'm not familiar with Texas whatsoever, but I love looking at these photos. It's beautiful. This is stunning. This is not a normal little mom and pop apartment complex. Like, these are expensive areas, and we can see there's tons of them. So you have them all over the place. They all look relatively similar. Look at that pool. It's just stunning. So these are higher end properties that can make good money over time in a really, really strong growing economy in Texas. Now, the company itself is higher risk for sure. And we're going to talk about that in just a second. But so far, to me, and this is just my personal opinion, it's not financial advice, this is screaming at opportunity. Part of the risk that comes with owning these OTC stocks is some volatility. And what I really want to talk about is their dividend history. It's something that I track with all my investments. I invest a lot in dividend stuff, and honestly, I'm very, very impressed for what this is doing for its size. Again, this is a $700 million company. This isn't even a $1 billion company yet. Will they get there eventually? Hopefully, but who knows? So they've been paying dividends since 2018, and we can go back and they pay monthly, which is phenomenal. Now, the dividend history is a little bit rocky. We can see consecutive years of dividend growth is 0. They are not growing the dividend right now. And this is what is speculative with these kind of funds, is they probably have to allocate this money to expansion rather than dividend growth. And that is not something that I'm against. I am okay with that. And they have 6 years of consecutive dividend payments, which is below the sector median. But again, they've only been trading since 2018 or something around that timeline. So the smaller dividend yield of 4%, but again, you're holding this for the growth, and the 5-year growth is down. I believe they paid a special dividend at one point, let's see, in 2020, and that is what kicked up the amount. No, it doesn't look like it. So they increased the dividend and then they cut the dividend. So that was their most recent dividend cut. But still, honestly, that's why the dividend growth has gone down. But still, because of what this company is and what the potential is, I am a big fan. Again, it's higher risk, but higher risk, higher reward. Let's talk about the third factor of why I think this fund could do extremely, extremely well in the near future. What we are looking at is the Federal Reserve Bank of St. Louis tracker of FRED, which is the 30-year fixed rate mortgage average in the United States. Now, we can see it wouldn't have been fun buying a house in 1981 or the 5 years before and after that. And we can see that unless you bought a house in 2020, which is when I was in college, that you are going to struggle. These rates have gone up so insanely high. We're going back all the way to 2008, 2009, and they are coming down now. And that is what I am talking about being a huge factor for BSR. For a small company like this, interest rates will dictate how quickly they can grow. It's a huge factor in where they're able to put their money, how much money they're able to take home. It is a huge deal. So checking this out, we can see that rates went all the way up to near 8 and have come down a little bit to 6.5. And they're expected to drop, I believe, at least 1 whole point, which is a whole percent. So roughly to 5.5, maybe low 5s within the next year, with cuts coming as soon as September is what I was told. But again, we don't know. That is still up in the air. But here's how this works. If you're not familiar with these REITs, they can consistently purchase new properties when it's easier to borrow money. And when I say easier, I mean it's easier as in you're going to spend less money to borrow money. When rates are lower, they can put more money towards purchasing new properties and taking out loans to upgrade properties, compared to when rates are really high. And that's just how it works. That's how all REITs across the board work. And that's why we've seen the REITs jump. I've seen my REITs jump 10 to 15% in the last 2-3 weeks off of the rate cuts, off the news of rate cuts, even with the market falling pretty dramatically. And so this fund, I think they have some pretty good potential. Now, there is some good risk. I'm okay with risk because I am a younger investor. But for me, BSR, they have some really solid potential. And I'm curious what you guys think. It is definitely lower risk than some of like the higher yielding funds, but it is still a smaller yield at 4%. But if you get on the ground floor with some of these funds and they continue to trade up and they're more valuable than what they're trading for, I am all in. For long term, it's fun making a lot of money off dividends and such now. But when it comes to these investments, I want to look back in 20 years and say, wow, buying BSR was one of the best things I ever did. And there is some potential for that to be true. So I hope you guys enjoyed this video. If you did, let me know by liking the video, subscribing if you want more content. Even if this isn't the typical super high yield investing I talk about, I do think it's important to mix it up every once in a while. So I appreciate you guys being here, and I hope to see you in the next video.